Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies of Academics of the Institute of Chartered Accountants of India. In the last session, we were discussing about declaration and payment of dividend. So let us continue with that. And so in case you have any queries, you can always raise it in chat. Okay. Is my screen visible? So in the last class, we did cover quite a lot of ground. We talked about interim and final dividend. We spoke about how to calculate the dividend. Also, what happens if for interim dividend if there is a loss. Okay, if there is a loss in the quarter ending before the year in which you want to declare interim dividend, we said average rate has to be maintained. Also, we said there is no need to transfer profits to reserves. It is left to the discretion of the board. So these were the things. Now we are going to one more topic, which is we saw declaration of dividend when there is inadequacy or absence of profits. Right. Now, my dear friends, we stopped here. We worked out a few problems. This is a frequently tested area for this topic. Therefore, I thought we could have one more problem-oriented question, which we could try to answer. I will leave it to you. What I suggest, you take about 5 minutes or 2 to 3 minutes, read the problem, and try to work out the answer. And try to give that in the chat box, right? Yeah. I'll just read it for you. Acme Engineering Limited has been declaring dividend regularly for the last 5 years. The paid up capital of the company is 400 lakhs, right? Paid up capital. Okay. The profit and loss account, after providing for depreciation, has a balance of 20 lakhs. So there is a P&L. See, remember, P&L balance can be used directly. We don't have to apply these conditions. The Rule 3 conditions, these are Rule 3 conditions. 3 conditions, these need Rule 3. I call them Rule 3 conditions because they are contained in Rule 3 of the company's declaration and payment of dividend rules. These Rule 3 conditions need not be applied for P&L account. P&L account readily available. Over and above what is there in the P&L account only will be taken from the reserves. In this company, the reserves amount to rupees 180 lakhs, okay, which includes CRR, Capital Redemption Reserve, to the tune of rupees 100 lakhs. The board of directors wish to maintain a constant rate of dividend and declare it dividend at 18% because they've been doing it for the last 2 years at least, 18-19 and 19-20. They've been paying 18%. They want to pay the same amount. Can they do so? If so, if yes, okay. If not, what is the rate they can declare? The minimum rate, maximum rate that they can declare. So I give you a little time to compute and let's see if anybody has got an answer. Take a photo of the screen if you want. That's easier. No? If you have a mobile phone with you, I'm sure it has a camera. Just take a photo and keep it in your hand so that even if I'm going to do something like this, you wouldn't have any problem. So I'm waiting for your answers in the chat box. So please understand there are three conditions. Am I correct? Okay. What is the first condition? Rate. The dividend should be, the rate of dividend should be maintained at the average rate of dividend declared during the immediately preceding 3 years. Immediately preceding 3 years. So average. So we are now in 2021. So immediately preceding is 1920, 1819, 1718. Wantedly 5 years have been given because in the earlier law you had a 10% cap and also you had average further restricted to 10%. Average of 5 years, further restricted to 10%. That was the old law, Purana Wala law. Abhi it is 3 years and no cap. Whatever you get, you can take. So there was earlier another cap of 10%, which is not there now. Absolutely not. Okay. So let us see. Even if one person can give an answer, see, you have to apply not just one condition, you have to apply three conditions. The second condition is the amount to be declared, should not exceed, the amount of dividend should not exceed 10% of paid up capital and free reserves and should first be applied to write off current year's losses or adjust current year's losses. Okay. Luckily, in this case, there is no loss. It's only 20 lakh profit in the P&L account, no current year loss. Inadequate profit, that's all. So that is one condition. Third condition is the balance of, I'm not seeing any answer, so I'm assuming that you are not calculating, and I will proceed with my explanation. Right. The third condition is balance of reserves. After the drawal, whatever amount you decide to draw, after that, the balance of reserves, that is, the remaining reserves should not fall below 15%, 15% of paid up capital. That's all. Three simple conditions. You don't have to mug up. You don't have to memorize. As I'm now teaching you, you can remember it without any mugging up, without any memory, and then systematically apply it. That's all. First, you apply the condition in condition number 1. What is that? Average rate of dividend for the immediately preceding 3 years. So I get 15 plus 18 plus 18 by 3, 51 by 3, we get 17, right? 17. So the rate of dividend cannot exceed 17. This is the condition 1. We have 2 more conditions. So the next condition is the total amount that can be drawn from accumulated profits shall not exceed 10% of PC plus FR, paid up capital plus free reserves, right, sir? Now that means you have to calculate PC plus FR. Sir, free reserves, you have to be careful. We already defined a free reserve. What did we say? Free reserves are those reserves which are available for payment of dividend. Capital redemption reserve is not. In fact, whenever we redeem preference shares or we redeem or we buy back, the nominal value of the shares redeemed or bought back will be transferred out of profits, not out of fresh issue. Out of profits, the nominal value will be transferred to CRR so that it becomes part of the permanent capital of the company. Okay, it cannot be given away by way of dividend. No, but it can be used. CRR can be used for declaring fully paid up bonus shares. CRR is available for declaring. You already studied this in share capital and debentures. Still, I'm just making a point here. So CRR cannot be used. So total reserves minus capital redemption reserve, right? So out of 180 lakhs, 100 lakhs is CRR that cannot be taken. Therefore, balance 80 lakhs available. So if you take that, okay, 400 paid up capital plus 80 free reserve, total 480 lakhs. Of that, 10%, 0.10 is 48 lakhs. So you can declare, boss, 17% is condition 1. Now condition 2 has further reduced the amount, this because the amount, see, suppose you are declaring 18% on the paid up capital of 400 lakhs. If you are going to declare 18% on 400, you will have 72. You will have to, the amount to be used is 72. The amount to be used is 72, right? But we don't have 72. The amount is now restricted to 48, 10% of free paid up capital and free reserves. So if you take 48 lakhs as the amount, 400 is the paid up capital, you get 48 by 400 into 100, we get 12%. 48 by 400 into 48 by 400, we get 12%. Now, what I want you to do is, I want you to calculate 15%, because this is an advanced question. I'm using it as my last example to I'm using this as my last example to make you understand what happens if that condition is also not satisfied. Suppose the balance of, we saw one similar problem earlier. This will be even more, relevant, where you can take that also. And 1 second. I'm just going to the query pad. Now that query pad, we can go there. You can also post. I'll just take my query pad in. In the meantime, you can do the calculation if you want. Yeah. Query pad is also on. If you want, you can also post your questions or answers in the query pad. Now, let us see why you are not able to, why you are not giving in the chat. Why are we not considering P&L balance? Good question, Mr. Because, see, we are calculating the amount to be declared out of accumulated reserve. Am I correct? Therefore, we are not considering P&L balance, because that entire amount we are going to take it anyway. See, the entire P&L balance we are going to take it. Balance beyond that only I have to take. It's a good question. Okay, that is why we are not considering P&L balance. Okay, though P&L is a free reserve, agreed, correct. Okay, I agree with your view, but this is my explanation. Under third condition, you mean, not case, condition, 32 need to maintain reserve. Okay, once again, we'll see how it is. 32, how do you get 32? I don't know. So I don't know why this thing is not. There will be a floater here that is not coming. I don't know why. Now, so condition 3, balance of reserves should not fall below 15% of paid up capital. Now, what is the reserve? See here, if you see here, we are taking, okay, 48 lakhs minus 20 lakhs. Got it? That is, free reserves is 48 lakhs. Correct? This is the amount which we are eligible to take. Out of that, we anyway 20 lakhs is there in P&L. So the amount we are going to take from the reserves is only 28 lakhs. Correct? So to answer Mr. Kashish's question, this 48 includes your 20. This 48 includes your 20. And that with the 20 only we are calculating 12%. With the 20 only we are calculating 12%. But from the reserves, how much I am taking? Only 28. Because 20 is coming from P&L directly. P&L account gone. Now the reserves is 48. Balance of reserves after the drawal is, see, you can take it both ways. Yeah, you can take 48. Either way you take, it will come to the same thing only. Okay, and you will get 48 minus 20, 28 lakhs. Now this 28 lakhs will be drawn. After you draw 28, you are having 52. 52. Whereas how much you should maintain? 15% of 400 lakhs. 15% of 400 lakhs, right? 15. Okay, 15 by 100 into 400 gives me 60. Whereas it goes below that. So even if you don't understand this, it's not a problem. Look at it from a simpler angle. 15% of 400 lakhs is 60. Whereas if you draw 28 from 80, I'm getting 52, right? Which means that the balance of reserves condition not satisfied. So it's not that we need not say we can't declare. You need not say because of this you cannot declare. We can still declare, but at a lower rate. How to calculate that? See, what is 15% of 400 lakhs? 60 lakhs. So the reserves which are available after the drawal should not fall below 60. That means what? 80 minus 60. Only 20 lakhs we can take. So if you take 20 lakhs, the reserves will be maintained at 60, which is 15% of PC plus FR. Right, sir? So 20 I can take from reserve. 20 I have already got in the P&L account. So total 20 plus 20, 40. That means 40 lakhs is the amount I can use, which is on 400, it becomes 10%. Therefore, Acme Engineering Limited can declare dividend at the rate of 10% for the financial year 2021. This is a slightly advanced problem. In the exam, many times they have not asked even so tough. They have asked only for condition 1 and 2. But still, I thought we could discuss one more problem which would help you to understand this slightly better. If you still have, if you have any doubts, you can definitely ask me and I will clarify. Okay. Correct. Vijay Doshi, beautifully said. 10%. You've given the answer correctly. Beautiful. Yeah. So 32 need to maintain. No, actually it's 60. Now we have only, okay, it's not 32 because that 20 you don't consider. 20 you don't consider. Whatever it is, if you take it as 32 also, point is that you can draw only 20 from reserves. Because 20 is going to come from P&L. Balance, I cannot reduce the reserve from 80 to below that. So 80 to 52. So therefore, 80 to 60 journey only can come. That means 20 lakhs only available for declaring. Fantastic. Okay. I tell you, this type of problem is easy, and if only you can, maybe work out another one or two more examples. You are there. You will get easily about 4 marks. 4 to 5 marks for this. 4 marks minimum you will get. If they ask you a problem the way I have now worked out the last one, it will be 5 marks straight away for you. 5 marks to enjoy. Because it's only systematically presenting here. Okay. So, as per the rules of the Board of Studies, I will be uploading this. This slide is already available in the portal. You can download it. But again, I will upload it for you to enjoy. Okay. Even I think the video is available. Later on, you can, those of you who missed it 1 or 2 classes can always. Though, believe me, I have also undergone many online courses, and it's actually as you become older and you become a little more busy with life, these online classes are so useful because we spend the evenings. Like I learned entire astrology during Corona through online, and I was able to learn it over 2.5 years. I could learn astrology Now I'm in the process of learning Vainava philosophy, also online. So evening 7 to 8:30, 6 to 8:30, like this. Then of course the videos will be available. But believe me when I say this, if you watch it live when the teacher is teaching, it will more impact than when you try to watch on a video. Because all said and done, 2.5 hours video pass. You feel bored and you go away. But whereas here it's a confirmed class, you have to come sit and interactively we can talk and you can ask questions and all. And others will ask questions that could also be available to you. Okay. So you could feel free to, my suggestion, attend the classes. Okay. Then if because of no other choice, you are forced to miss 1 or 2 classes, definitely you can download and watch the video. Right. But I have a lot of Ekalavya students. Believe me when I say that. Because suddenly in Chennai or somewhere else, when somebody will come to me and say, "Sir, are you Srikanth? Sir, yeah, I am so and so. I have downloaded your videos and learned company law, I cleared," whatever they say. It's good because we have not, all of you are Ekalavya in that sense because I can't see you. Okay, whereas you can see me, I can't see you. So whoever you are, wherever you are, take the knowledge, write the exam, clear it, become a member banao fast. Okay, jaldi member banao. Go on. Okay, now going on. So certain companies cannot declare a dividend. Okay, because simple logic. Dividend is a reward to the shareholders, right? Now, suppose the depositors have not been paid. So that shows a financial indiscipline where they have taken deposits from the public and these deposits have not been paid. In fact, they don't talk about non-repayment alone. They talk about complete failure to comply with the provisions of Section 73 and 74, which you already covered, acceptance of deposits and repayment of deposits. Okay, there are many formalities. For example, you have to issue a statutory advertisement. You have to maintain cash reserve. So many conditions are there. You have to file an annual return. Right. All these conditions have to be fulfilled. All these provisions have to be complied. A failure by any company which complies this 73, Section 74, straight away there is a prohibition on declaration of dividend. So long as such failure continues, declare any dividend on its equity shares. Remember this. Suppose they may ask you a simple question wherein they will say, so and so company wants to declare dividend, blah, blah, blah. You will also get into the problem. But there in the corner, somewhere in the problem, it will be said that the company is not repaid its depositors for the last 2 years. Be careful, because that means even if you say by these conditions you can declare, etc., since so long as this default is there, they cannot continue. They cannot pay. So long as that failure continues. Note it, your honors, it's not that there's a permanent prohibition. If they rectify the defects, comply with the conditions, then they can declare dividend on the equity shares. Right? In case of Section 8 companies, there is a prohibition. Section 8, as you know, this prohibition is because by its articles, the Section 8 company says, we will not declare any dividend. The profits will not be paid to the members as dividend. It will be only applied in promoting the objects for which it is formed. So this is something essentially conditioned to the Section 8. If this condition is not satisfied, Section 8 company will lose its license. Remember, the Section 8 company is licensed by the regional director. The company is formed with social objectives, etc. Then it applies for a license to the regional director and says that this company on incorporation will carry on certain social objectives, charitable objectives, and it won't declare dividend, and whatever profits or surplus is generated will be applied towards the objects. Subject to that, they get a license. If they violate it, the license can be revoked. You studied this in incorporation, I hope. Section 8 company and all that. Now, we come to another very important point here. You can say in terms of importance, this is the second most important topic. Okay, means declaration of dividend out of accumulated reserves is good, important area. This is next most important area. Should know these very well. And please note, dividend not paid or claimed within 30 days from declaration. Okay. So first point is once dividend is declared either by the board or by the shareholders. Please note it, Your Honor. Simple point. Why? Because definition of dividend says dividend includes interim dividend. So that means what? Whatever rules apply to dividend will also apply to interim dividend, which means once the board of directors have declared it or announced it in the board through the board, then within 30 days it has to be paid. Right? Dividend not paid within 30 days. In case it is not paid within 30 days, then within the next 7 days, you have to deposit it in a separate bank account called unpaid or unclaimed dividend. There is XYZ Limited unpaid stroke unclaimed dividend account. It should be opened in a scheduled bank, means a bank which is mentioned in the first schedule to the Reserve Bank of India Act. If not done, on the 7th day expiration, if the money is still in your regular bank account, then you have to pay interest at 12% per annum from the date of default. So, declaring dividend, 30 days, then 7 days, expiry of 7 days, thereafter, you have to pay 12% interest. Right? So, which is steep. If you look at the going rates for corporate borrowers, which is roughly, say, the highest rate could be 10%, 9.710, highest rate. Okay, that means you are easily going to pay 2% as a penal charges for not paying. If you're going to rotate the funds, the government is going to charge you a rate higher than the bank rate. So you're not escaping. That is the point. Okay. Many people try to do this. Not only that, in your future career as a member of our institute, especially in service, when you're working as a CFO or head finance of a company, you will have this brilliant idea of rotating GST. Okay. And also you will think that after all, the due date is only 20th of next month. So why should I not use that money? To an extent, you can play that float game. But be very, very careful to ensure that on or before 19th midnight, you got the money in the bank to pay. And you pay. So that on 20th, beyond 20th, you should not keep that GST pending to the government. Whatever government is due, you pay to the government. Because that realizes all sorts of problems. The minute you start saying, okay, chalo, bank interest, but that also I'm telling you, GST, TDS, everywhere it's 12%. So beyond the due date, if you keep that money, you are going to pay a higher rate of interest than the normal available rate in the market. Therefore, it is a fool's game. Don't try that. Rather, if you want to play the float game, it's very, very dangerous. Play it. You can say from the 10th of say 10th of April till say the 15th of May, you got some float time where you can use that money, etc. But I still say no, but it's be too much. Where whatever GST is collected should not be touched at all. That is not fair. One more thing, we also have to pay it whether we collect or not. So that is that. Therefore, but be sure that your cash flow management includes payment of GST on the due date. Okay, that the king and queens of cash flow, be careful that your cash flow management skills should include payment of statutory dues on or before the due dates, well in time. Okay. This is a suggestion from a senior member. Don't take it otherwise, because it's so easy to get into this games. So remember that doesn't work. Okay. Of course, I'm a senior practicing member. So maybe I'm being very cautious, but nothing wrong, because tomorrow if you don't pay it, 43, there's so many problems in not paying. It will be disallowed. Straight away 43C, disallowance, okay, penalty, all that sort of thing. So compliance, no. See, in fact, I used to conduct a workshop for entrepreneurs wherein we used to have one whole session. I used to call it the cost of non-compliance. The cost of non-compliance. Okay, penalty, there's a huge cost of non-compliance. Whatever may be the benefit of non-compliance, if you look at the cost of non-compliance, the cost benefit, you will find the costs are way above the benefits, if any, that you can get from non-compliance. Okay. So prepare a statement. Okay. Within 90 days, you have to prepare a statement giving the name, last known address, and the unpaid dividend amount, so that the member will know that the amount is due to him. You put it on the website of the company. and any website approved by the government for this purpose. Right. Thereafter, the money sits in that account for 7 long years. The 7 years is going to become a very important number later when you come to investment in investor protection and education fund. So 7 years, 7 long years, it's going to sit in that account. You can't touch the interest also. Please. Completely to go to the government of India. We are going to see that. So after the expiry of 7 years, the amount which was transferred, right, together with the interest has to be transferred to what is known as the Investor Protection and Education Fund or Investor Education and Protection Fund, IEPF. IEPF, Investor Education and Protection Fund. More about this fund, we will come to it. Right now, let us finish unpaid dividend account. Let's see. But I don't know why you are not accessing the query pad. Query pad is an excellent way of raising queries. I don't know why you are not doing it. There is a query pad link. I hope you have it. You can use it and you can benefit from it. In those days, I used to keep an eye on the query pad also, but today I don't know why this thing is not working. Okay, so no more questions are being asked by you. Therefore, I will continue with the topic. So the next point that we have to see is ICAI Engineering Limited has declared a dividend of 10%. As we saw, you remember ICAI, our friend ICAI. So we said you can only declare 10%, right? So that fellow said, okay, sir, I will declare like that. And this fellow declared 10% dividend at its AGM on 27 September 2020. Good show. Now, referring to the provisions of the General Classes Act 1897 and Companies Act. See, this is a nice question. In fact, our exam being a professional exam, there would be more, shall we say, linked questions. Wherein, see, as a professional member of our institute, you cannot say, sir, you are asking in this topic means you want to ask only in this topic, sir. You cannot ask in another topic when you are in this question, sir. Like that, you cannot tell. Because think about it. Later, as a member of our institute, the client will come to you. He won't tell you which section and all. He will come to you with a problem, which will be possibly connected with more than one subject. And I'm not talking about within that subject itself. So the problem that the client puts on your table or the problem that your board of directors put on your table would be multi-various. Like it will have impact of taxation, indirect tax, direct tax. While you are there, you have to see company law issue also. While you are there, you have to see FEMA also. So many impacts would be there. Everything you have to take. TP also you have to see. Transfer pricing. So we have to take everything and then only do the analysis. So why I'm telling this, we should prepare ourselves emotionally for it. We can't say this is what it is like that. That is all I'm trying to tell you. So here, this is a beautiful question connecting the General Clauses Act 1897 and the Companies Act. See, in the General Clauses Act, there is a section 9 of the General Clauses Act 1897. I assume that it is still in your syllabus. I don't know if it is. I'm very happy that it is in your syllabus, though instead of giving the entire act, what can be done is we can take selected portions of that act. Only about 10 or 10 sections are relevant for us. Only those can be dealt with instead of reading the whole stuff. And remember, it's an 1897 law, okay, pre-independence law, which means much of it is not relevant today, archaic, but some are very relevant. Like, for example, computation of time. See, whenever an act says a time limit, a time period will begin from, okay, so the section states that in any legislation or regulation, it shall be sufficient for the purpose of excluding the first in a series of days or any other period of time, to use the word from. Okay, so basically, whenever the time limit is prescribed, it says from to, then the first of the date should be ignored. Okay, the first date should not be taken. You have to start counting the period from the next day, right? Next day. So, and for the purpose, we will include the last in a series of days. So, within 30 days from the date of declaration. So, the date of declaration should be excluded. So we are saying within 30 days from the date of declaration. Am I correct? The word from is used. The minute the word from is used, date of declaration should not be taken. Similarly, expiry of 7 days. Okay, so on the expiry of 30th day, the 7 days have to be counted now. So the 30th day should not be taken. So the next day only you have to take 7 days, right? So that is the thing. So now, based on these two, they want you the date on or before which Acme Engineering Limited is required to pay the dividend. Pay the dividend, 30 days. Date on or before which Acme Engineering Limited is required to transfer the unpaid unclaimed dividend to the unpaid dividend account. So 30 and 7. How to calculate? Okay, so Acme has declared a dividend of 10% on 27th September. So from means when the word from is used, you should ignore that date. So the date of declaration will be excluded, and the last or 30th day will be included. So till midnight 27:10, correct? 27:9 na. So you don't include 27:9. So you have 28, 29, 30, 28, 29, 30. 3 days, right? 3 days. 28, 29, 30. 3 days in September, right? Balance 27 days in October. 30 minus 23, 27. Balance 27. So 27:10 is the due date. On or before 27:10, you have to pay the dividend, right, sir? That 27th will be included. Okay. So you have to pay within the period from 27:10 commencing from 28/9. So 28/9, 2020 to 27/10, 2020. Same way, 7 days. While calculating, you should not take the 30th day. The expiry of the set period of 30 days is to be date of expiry of the 30th day. So in our case, the 30th day falls on 27/10, correct? So 27/10 you have to ignore, and you should start from 28/10. So 28, 7 days, 28, 29, 30, 31. October has 31 days, 31, 1, 2, 3. So 3rd November, midnight, you have to transfer it. Both days are included. Okay. So you have to commence from 28th. Okay. Both days includes. That is right, sir. So 27/10 is the last day, 30th day. So you start counting from 28th. Okay. You don't include the last day, 30th day, because from the expiry of 30 days. So that 30 days should, last day of the 30 days should be excluded, which means 27 out. So 28, 29, 30, 31, 1, 2, 3. 3rd November, you have to, before on or before 3rd November, you have to transfer it to unpaid, unclaimed dividend account. Right, sir? See, all this is there. You can pay it by cash. No, today you cannot pay dividend by cash. Though the act says you can pay, sir, actually you can pay under the income tax act up to 2,000 rupees. Now no company pays. Even if it is 1 rupee, 2 rupees, it is NEFT. Okay. So electronic mode is preferred today. But you can, of course, issue checks. You can also issue warrant. See, the warrant will be payable to bearer. The warrant will be a bearer instrument. So there may be sometimes where share warrants are there, in which case they will not know who is the member. So they will only have share dividend warrant will be there, which the member has to come and collect it and go. That's all. But all that is not there, sir. Today, if the company declares dividend, straight away the designated bank account will be there with the DP. There will be a designated bank account with the depository participant. Every one of you who has a DP account would have linked the DP account to one or more bank accounts. In fact, they will ask you to say this account. So whichever account you say is linked to the DP, that account will be credited with your dividend. That is it. So that bank account becomes very, very important. Okay. If such an account is there, you should not close it, or you should not middle. Unless you want to open another account, then you have to change the DP profile and add this account now and remove that account. Simple. So, okay. See, the Nidhi companies are a special class of companies which are meant to promote small savings in small area or group. See, within a city, a small town, or within a small area in a city. Okay, so the Nidhi companies are given some freedom to take deposits, but one important condition is they can deal. That is, they can borrow money or take deposits only from members, and they can lend only to members. So it's called a mutual benefit fund. Nidhi company is also known as mutual benefit fund. So members, see, when surplus is there, the member will save it. Now that money will be used to give a loan to a. This works when you see there are a lot of towns where there will be an agricultural economy. The town would have developed. There will be a temple. Around that temple, there would be a lot of traders who would there, and around that there would be a lot of artisans and businessmen. Around that there would be huge area of cultivated land. So all the farmers would have to come to this town only to. So in those cases, what happens now? The small savings can be mobilized by this Nidhi company, and the traders and the businessmen will be able to borrow from this and scale. The minute it was completely put a clamp on Nidhi companies. Now Nidhi companies are closely monitored, but still they do function well, etc. So it's a nice concept, where especially in the southern part of our country, you'll find that Nidhi companies have flourished, and there have been, in fact, some of the older Nidhi companies are 100-year-old Nidhi companies are there. Our firm used to be an auditor for the Triplicate Benefit Fund, which was it's one of the older funds. No, it completed 100 years now. 100 years of the Triplicate Benefit Fund, the Nungambakam Benefit Fund. These are all within the city of Chennai. We have about 5 or 6 powerful benefit funds, but Nidhi companies. So in terms of dividend, after Nidhi company, normally only banks can open savings bank account, SB account, only a scheduled bank. Nidhi company can also operate a SB account for the member, so that any amount will be credited into that account, and there will be a passbook and all that. So any dividend can be paid by crediting to the account of the member, in case he doesn't claim it within 30 days from the date of declaration. Right? It's an exemption given for Nidhi companies. Now, suppose the money has been transferred to the unpaid dividend account. 7 years later, it has gone to the unpaid dividend. For 7 years, it will be there. No problem, because if you think you are entitled to it, come to the company. Prove yourself. Take the money. No problem. Okay. But suppose it has been transferred to the IEPF, then we will be seeing that you have to go to the IEPF and apply. It's a little long-winded process. Can be done. So 120 for the company, 1 lakh rupees, with a further penalty of 500 rupees for each day after the first, during which such failure continues. Sometimes, in these continuing offenses, I'm sure you're aware of it, and still, this is called continuing offense. See, there is a violation. For that violation, 1 lakh. The violation continues now. For every day during which the violation continues, failure continues, you'll pay additional penalty. This is called 500 into number of days. If it crosses 10 lakh, it will be restricted to 10 lakhs, 10 lakh rupees. Which means this is exactly what I'm talking about when I say cost of non-compliance. Not filing annual return, not filing P&L financial statements. All that is cost of non-compliance. Okay, why pay this cost? Better be compliant. Okay, in fact, one of the roles that we as professionals should play actively, one of the, I would say, important roles that we play is to alert our company or the employer, the board of directors, the audit committee, as well as client about this. What are all the compliances? So once you become a CFO of a company, remember the entire compliance framework is going to come into your hands. Failure will be your fault. Okay, sorry, I'm being very blunt here. So now you cannot say I didn't know. If you don't, suppose you have a doubt, you have to take opinion. See, there could be a genuine ambiguity what to do. You go to your auditor, the auditor of the company, he will is an expert in that area. They will give you a opinion, but you go by that rather than say, I'm not aware, therefore I didn't do like that. In addition to the person's liable, please note it, every officer who is in default also will be punishable with fine 25,000 rupees and 100 rupees for each day after the first, subject to a maximum of 2 lakh rupees. Earlier, there was imprisonment also. But now there is no imprisonment, only fine. Earlier, it was felt to be such a heinous offense that it was fine and imprisonment. Now they've removed the imprisonment because in 2020, what they did was Amendment Act of 2020, they decriminalized the Companies Act. Decriminalized the Companies Act. See, the Companies Act had stiff penalties, stiff provisions for arrest, for imprisonment. So most of the sections they've removed imprisonment, and there's a no need. After all, it's an economic legislation. It's not a, I think so. There's no crime here so as to warrant imprisonment. But still, they retained a few, but not all. Most of the sections which earlier talk about imprisonment have now removed that, and they have only fine. Of course, the fines have increased a lot. We now move on to the Investor Education and Protection Fund. Let me see if you have any worries in the query in your chat. Yeah, see, usually what I will do, around 7:15, I give a break, sir. Okay, my usual break is at 7:15. If you want to take a break, you can just go to the biology break and come, but don't mistake me. We will take a break at 7:15. Okay, not now. So, see, this question was asked once in the exam, talking about inclusion and exclusion. Yeah, if they mention General Clauses Act, you talk about Section 9. Otherwise, there's no need for you to talk about Section 9, right, sir? Just have to. So, Nidhi is under the Companies Act. It is not governed by the Banking Regulation Act. If you want basic difference between Nidhi and they are in a different co-op. See, they come under the cooperative sector. Okay, they are similar but not same. Cooperative sector, they will be moving towards certain types of industries, certain types of things like weavers, farmers, like that. Whereas here there is no such restriction. Anybody can become a member. So to become a member of a cooperative bank or cooperative society, okay, here Nidhi will only deal with members. Cooperative bank is not like that. Anybody can become, even if you're not a member of the bank, you don't have to be a shareholder of the bank to deal with the bank. Whereas if you have to be a member of the Nidhi. So what they normally do is when you approach them, either to deposit money or to borrow money, they will ask you to buy 1 rupee share. A share will be having, so yeah, though they seem similar, Nidhi and cooperative bank are slightly different. They're totally different. Cooperative banks come under the Cooperative Societies Act, and they are governed by the Reserve Bank of India. Whereas Nidhis are not governed by the Reserve Bank of India, except peripherally. Some small rules are there, but otherwise they come under the purview of the Companies Act, right? So they enjoy certain benefits. Whereas but comparatively, cooperative banks are also not so much controlled now. They can see, which is some of the KYC norms are not so stringent for cooperative banks. Some program, seriously, there is a popular belief amongst my clients, and I don't know how they got this idea, that if they have an account with a cooperative bank, the government will not know about it. That it won't come in 27C. They think like that. It's not like that. When you opened your account, you gave PAN number, right? So that the minute you give your PAN number, you are visible. Wherever you are, whatever disguise you have, you are visible by the PAN number. So no, sir. Cooperative bank, we can ignore it. Later they will say, either do it at your risk. Please give me a waiver that I have advised you, and you are telling you won't show. Then tomorrow, consequences, I will bear it. You give me a waiver or account there, you can hide it and all that. Seriously, I don't know. Believe me, my dear friends, Today, maybe I'm giving you a little more input on this. Believe me, 38 now, 39 years. Next year, July, I will complete 40 years of practice, 40 years of holding a COP. I've been holding, next year in July, I would have completed 40 years of holding a COP, Center of Practice. Proud member of the Institute of Chartered Accountants of India. Point I'm trying to make here is 40 years down the line, I'm telling you, there is no premier, there is no, but the company would be advised within quotes by their employee, or they will do it. But of course, with due regards, they'll say, Shrikant sir, please don't mistake it. Look here, open eyes, you're going inside, I have no problem. Tomorrow, don't come to me and say, I didn't tell you. Okay. So they'll go, and later on, they will regret it. So much so that I remember one MD of one of my clients, after that case got defeated in addition was made, then it went to CAD appeals. CAD appeals also, it was demolished. Then it went to ITAT. ITAT also threw it out. They said it is taxable. That amount is taxable. And then he goes to High Court. By that time, 6 years are over. The interest has piled up. And so for that meeting with the advocate, he said, you also come. So I said, I'll come. But anyway, from the beginning, I've been telling it is taxed. So years ago, you told me to pay the tax and be happy. I only now wish I had paid it. That time itself, it was a nominal amount. I could have instead of, I mean, in compared to the amount involved, is nothing. I would have paid it. I would have been happy today, Shrikant, like that. So what to do? At least now you realize that questionable tax planning and questionable and outright tax evasion, non-compliance, there's no premium. It is a bad thing. So this may sound on your company in that way. Okay, it's a suggestion. There are some situations where you can take a calculated risk, where the act opportunities are there, where you can put yourself in 2 years. So that being the case, better pay the tax and be happy rather than try to evade the tax. I mean, let not we as members of this institute be branded as people who will help in tax evasion or people whose only job is reducing tax. No. When a client tries that stunt with me, I tell him, look here, I am not here to reduce your tax. I am here to tell you what is the exact tax you have to pay and see to it that your business is compliant. If that is the role you want me to play, I can. But if you are expecting that to earn my fees, I have to reduce your tax. Sorry, I'm not in that game. Maybe in the same street, another 4 doors down the lane, one auditor may be there. Go to him, not me. So this language, so they realize, okay, and within that framework, if something is possible, yes, I will be the first man to advise you. Take advantage and do it. Okay. So we now move on to the IEPF, the Investor Education and Protection Fund. Okay. So this fund has a history. It was established. See, this fund was not established under this law. This fund was established as early as 1999. Little before that, 1998 or 97, 98. Before that, there was no fund. But there were many people who had clarity. See, I still remember there was a gentleman called Mr. Kannan. Okay, he was the president of the Tamil Nadu Investor Association, TIA, Tamil Nadu Investor Association. Third most important investor association in India. The first one is, of course, Ahmedabad, then Vadodara. Vadodara has a very powerful investor association, and then Tamil Nadu, TIA. The TIA ex officio president and secretary sit on the SEBI consultative committees. In fact, I was the secretary of the Tamil Nadu Investor Association much later. Kannan was there before 90s, early 90s. I come much later in post 2010, and I took over I became the secretary for 3 years. Why I'm telling no, the Tamil Nadu Investor Association was, Mr. Kannan was active, he was an activist, and he was continuously telling the government, especially after the KP scam. See, that was 2000. Around that time, nearing that time, there was a huge collapse of the market thanks to a gentleman called Ketan Parekh. Then Harshad Mehta was there. All these scams came. And so the government was also not, see, they were saying, look here, agreed, these people went and they invested, but you should have provided information. You should have provided education, and you should have to educate us by talking. See, today, even at the cost of irritating you all, I said, be compliant, don't evade tax. But somebody has to tell it. If nobody tells it, then nobody will know. Unless somebody takes the mic and tells, don't do this, this is wrong. So people will keep on doing something and getting into trouble. Therefore, there's a need for education and protection. And Kannan's logic was very, very beautiful. I heard him in my Rotary Club in 1995, 96, I remember, when he made a vehement plea to all of us and said, hey, you all of us should act, we should tell the government, see, there's a huge amount of unpaid, unclaimed dividend lying in the unpaid, unclaimed dividend accounts, which was transferred to the general account of the central government. There's a general revenue account of the central government. Huge amount is lying in the general account, general fund. Huge amount. Huge means huge. I'm talking about hundreds of crores. At that time, he was talking about something like 400 crores. 400 crores at that time was lying there. Why? Because nobody will come and can claim it was. So many cases, they were all Binami transactions. So the owner of the share wouldn't want to come and claim the dividend, or simply they don't know. Amounts are too small for them to bother, but collectively they became a huge amount. So Kannan said, look here, don't give me that money. That money belongs to the owner. But that money is earning interest now. Give that interest to us to educate the investors. So that finally, well, of course, he passed away. Then this IEPF was formed. And in 2000 or in that time, around the time of KP, Ketan Parekh and all that. And then when the new law came, they have continued to have the Investor Education and Protection Fund. So as Mr. Kannan told at that time, now, where will the fund come for this IEPF? Government does not have money. Government is having so many, projects. They have to spend. Social projects are there. Freebies are to be given. So I can't. Where will I get the money for protecting the investor? You don't have to get it from your budget. That's what Kannan said. Just take the interest on these amounts and give it to us. I mean, not directly, but through some method. The superb method has been set up, where the IEPF routes it through SEBI, routes it through the Institute of Chartered Accountants of India. All the three institutes they have the education and investor education protection programs. Okay, so the money is given to these institutes, and TIA was itself a SEBI registered body where we used to have investor education and protection activities. And for that, we were given from SEBI. Our money was routed through SEBI. So once we make a claim, they will, whatever expenditure they have incurred for the program, they will give it to us. So we will call for a meeting, public meeting, where we'll invite a well-known impartial speaker, not somebody who will promote a mutual fund or promote some product, but totally impartial person will come and they will talk about what is right, what is wrong, what is happening here, and things like that. Okay, the fantastic thing. Though, of course, education and protection, the Indian investor cannot be educated. Forget protecting him. And he absolutely cannot be protected. But at least we can tell him something. Hey, don't do this like that. So, where will the money come from IEPF? From the amount given by the central government as a grant. Means central government will not give it out of their pocket, out of some benevolence of a feeling. No. They already have a huge amount from that revenue account. General revenue account all the earlier times before IEPF, the 7 years later, this money was transferred. Actually, before that, it was 3 years. So after 3 years, it will be transferred. 7 years, in those days, it was 3 years. It will be transferred to the general revenue account, general fund. And so that money is lying now, that they gave it to the IEPF. That was the amount given by the central government, and donations by central government, if any, and amount lying in the unpaid dividend account. What all money is there, after 7 years expiry, you have to transfer it to the unpaid dividend account. Amount in the general revenue account of the central government, right? That is that amount, huge amount was there at the time of starting. Amount in IEPF. Friends, before this IEPF, there was another IEPF that got closed, and that money comes to the new IEPF. The IEPF under the old law. See, there was an IEPF under the old law. That IEPF had money now. That money automatically became vested in the new IEPF. Then, whatever 7 years or more, money was sent, and then it is remaining unclaimed for 7 years or more. Again, it will be clearly giving your DPID. Once you give the DPID, automatically bank account is there. Only thing possible is, thanks to KYC norms, what would have happened? You would have designated on bank account there. That bank account, so the bank, this money would have come in and KYC complaint. No, for KYC non-compliance like that. You have to beg him and prove that you are you, and then freeze the account, defreeze it, and do all that. Okay. Application money unclaimed. Matured deposits unclaimed. So if somebody deposits but doesn't claim, these will be small amounts. I doubt if big amounts somebody will leave it. Maybe some small amounts they've forgotten. Some reasons it's not claimed. Okay. All that will get transferred. Please note it, friends. This amount lying in the unpaid dividend, amount application money unclaimed, matured deposits unclaimed, matured debentures unclaimed, and all will not be used for education and protection. They will be kept in trust by the IEPF. Anybody who claims, who now wants this, can go to the IEPF and make an application. There's an online application wherein you have to mention who you are and your registered folio number with the company, etc. IEPF will write to the company and ask them to confirm whether such and such a person is there in the record. Once it is confirmed, IEPF will then transfer this to the company. The company in turn will transfer it to your designated bank account and all that. Okay. So there is a process for that. It's a very beautiful process. I have done it for many clients who came to me, senior persons, aged people. They won't even know that such things are there. Maybe, see, the father would have bought some shares long ago, and possibly those physical shares, and forgotten to inform to his wife and sons. The son will know he's 60 years old. Father, I'll owe you like that. Then, Chalo, you give me this money and we'll take it. Okay. On H, I, and J, the interest accrued also. See, here also, unpaid dividend account, you will get it along with the interest. Similarly, here also, the interest accrued also will have to be transferred. Amount received from sale proceeds of fractional shares arising on issue of bonus shares or merger. When you cannot allot less than one share now. Minimum you can allot one share. Beauty. Thanks to dematerialization, you can allot up to one share, but less than one share, that has to be paid only in money. So when there's a rights issue or thing, then there will be fractional shares. So that may not be collected on issue of bonus and all. That will be transferred to IEPF. Redemption amount of preference shares remaining unpaid for 7 years. All these cases, the period is 7 years or more. Other amounts, if any, they have given some more items in Rule 3. Okay. And all those shares in respect of which dividends have not been claimed or paid for 7 consecutive years or more. See, up to now, we are talking only about money. Up to now, we were talking only about money. Now, in Rule 3, they talk about shares. See, 7 years, 7 consecutive years, the dividend on these shares were not claimed. Therefore, they say the company cannot let the company transfer the shares also. So, dematerialized shares, so they will be transferred or kept. Subsequently, the shares would be all the resultant benefits arising out of shares held by the authority under Clause B above, including bonus. Suppose shares are transferred. Thereafter, bonus issues made. That bonus shares also will go there only. All that will go there. All grants, fees, and charges received by the authority under these rules. All sums received by the authority from such other sources as may be decided upon by the central government. More of a open clause to cover any other items that the central government may decide. See, whenever there is a fraud or a corporate fraud like Satyam and all, the government will claim from the promoters who have done the fraud. Now they have caused damage to all these people. Now, so they will ask them to disgorge. Means it's literally, from that money has been swallowed by them. Now they will ask them to take it out and spit it out and give it. So all that money they will collect, now that disgorged amount also will go to IEPF only. Suppose there is a fraud and company has some fraud like Satyam or whatever, and shareholders are affected. Now they have to be compensated. Now, how to compensate? From this disgorged funds only we can compensate. That will go to IEPF, and then those people who are affected, okay, can make a claim and take compensation for their loss. Because it happened because of, for example, see, somebody had invested in Satyam, and because of Mr. Ramalinga Raju's sudden declaration to the SEBI, that infamous letter to the SEBI, the price of Satyam collapsed. So a man who genuinely purchased it and holding it on the day before the fall would have incurred heavy losses. No, these were people who also claimed compensation, but at that time, this new law was not there. 2013 law was not there, so they couldn't claim, except they could go only in common law and appeared before the Andhra Pradesh High Court, and API Court, of course, gave them some relief. But the point I'm making is, now statutorily they can claim. Okay, they can. You might have studied it in prospectus, where they can form it is a common cause, where they can go for a common cause petition and they can claim on behalf of one person can claim on behalf of all. Okay, all income will be credited. All amounts payable in the banking companies act, that also will be transferred. All other sums of money collected by the authority as envisaged in the act. See, whenever there is a banking acquisition and there are some deposits which are not being claimed, etc., that will be transferred again. That's under the Banking Regulation Act, especially for banks. Okay. So these are the sources of the IEPF, right? Now, what will it be utilized for? All this fund is now available. Believe me, the IEPF is a huge fund. And again, it is a fund. Okay. It is a fund. Like Provident Fund. Okay. PPF, Public Provident Fund. So it's a huge amount, like mutual fund, where a lot of money is collected, managed, interest is earned, income is earned and used for certain purposes. Correct. So this refund, so this is the utilization. First, refund of unclaimed dividends, matured deposits, matured debentures, application money due for refund, etc., etc. So whatever money went in, if you are the rightful claimant and you are able to prove yourself, it will be given to you. Okay. Second is possibly the most important activity: promotion of investors' education, awareness, and protection. See, problem in most cases in those days was investors simply did not have does not have a clean source of person giving you that advice has some hook on it. Either he wants you to become his client in portfolio management solutions, whatever. Okay, there's no pure disinterested guidelines coming to, except from certain bodies like the national. In addition to that, we have the investor associations like the Tamil Nadu Investor Association, all those investor associations are there. They promote, they conduct seminars. Now, all this money that is spent for conducting these seminars will be refunded or reimbursed by the Investor Education and Protection Fund. Distribution of any disgorged amount among eligible and identifiable applicants who have suffered losses due to wrong actions by any person in accordance with the orders made by the court which had ordered disgorgement. Remember what I told you? Disgorge means to bring out. The money was swallowed, it has to be brought out, and then it will be used for compensating those who have suffered losses. Okay. The one well-known is, of course, Ramalinga Raju's case. There are other cases also where due to certain actions, people will lose money. But believe me, there is only so much protection can be given. See, if there is a natural fall in the market, for example, news about war, huge, there is a pessimistic outlook in the market comes down, collapses. Now, nobody on earth is going to protect anybody from that. Not even the government, not even the IEPF can protect you. That is why SEBI keeps on telling mutual funds are subject to market risk. Share market investments are subject to market risk. So knowingly only you have to go there. After having gone, see, volatility, there are certain words in financial language, sir, madam and sir, which are very, very difficult. See, unfortunately, these words sound to be negative, but they are neutral. Two words. One is risk, the other is volatility. The word risk is not about, it's not negative nor positive. It is a neutral word, sir. There is a risk. Risk is possibility of occurrence, a non-occurrence of an event. It could be both ways. See, so risk is always measured in probability, sir. The minute you talk about risk, immediately you should start speaking the language of probability and say, what is the probability of the occurrence of the risk? And then try to protect yourself from it. Instead of saying that risk is, I will not take any risk. It's not possible. You have to take risk. And if you're going to take risk, how much risk are you willing to take? And what is the probability of occurrence of the event? Because, like that. I'm sorry, the idea is not to bore you with all this, but just to share some thoughts which could be relevant to this topic. Similarly, volatility. Sir, the minute we say volatile, we always think it's some negative, as if markets are volatile. Sir, it is the very same volatility that helps you to make money. It is a volatility that makes the market good to be in. Okay, but for volatility, if it's a straight line, then who will go? See, you can as well put it in an we have fixed deposit, get your 7.5% and go home. Yeah, no risk. Even there's some risk. Maybe put it in treasury bond or put it in post office savings. Take your 7.5%. Be happy. No risk. State Bank of India, 99. Even there, believe me, 0.01%. So whenever you speak about risk, always speak about percentage of probability. So I would say State Bank of India 0.02% risk. You say what State Bank? They can't say tomorrow if the government of India collapses, State Bank collapses. Okay. So our trust is in the government, and if that government itself is going to collapse, then there is there. Okay. So not Indian government. I'm saying there are many governments across the country in small countries, especially in Central Africa, Western Africa, and all. We don't know for sure whether these countries would be, when you're dealing business with them, you have to be very careful. There's a risk there. Okay. But there may be profit also. And volatility, see, when you say the share is volatile, invariably you are thinking about, I bought it today, it will go down mindset. I'm saying volatility works the other way also. It may go up. So when I buy a share, with confidence, I say, look here, this share is going to go up. And I'm looking forward to the market to become volatile. Go up. And prove me and give me my earnings. So both these words are, nobody can protect investors from volatility and risk. But genuinely, if somebody has wantedly defrauded, then those who have suffered will be given compensation. But I've noticed this a lot in Indian investors, that whenever the market goes down, they simply are not willing to accept that they took a risk and they lost money. No. The government of India should have done something. The SEBI should have done something. What they could have done? The chartered accountants have to do something. What chartered accountants can do? You people are signing balance sheets. Correct, you are signing balance sheets. You read those balance sheets, know about this company. No, how can we trust your balance sheet? You only sign Satyam. Like, they're all crazy arguments they'll give. I'll tell them, boss, one Satyam don't decide. Yeah? Every balance sheet that the chartered accountant says cannot be like that. At least give it some amount of benefit of doubt, and you read and make up your mind whether this company is worth investing or not. Okay, is what I say. They won't. No, Mr. Srikanth, you don't understand all these things. There is something called technical analysis. Based on the price of the share only, we will do. I will not see the balance sheet. Like that, all they'll say. Then you are buying into a business, boss. If that business is not doing well, then you are totally relying on the volatility of the market to make money for you. Okay. Anyway, because it's a bigger concept and a bigger thought. Okay. Anyway, reimbursement of legal expenses incurred in pursuing class action suits. You would have studied this in 37. Am I correct? When you studied prospectus, you would have studied class action suits, where a single person will file a suit or a group of people file a suit on behalf of a larger interest group. Okay. And those cases, the legal expenses can be subsidized from IEPF. Why not? Only after this class action suit is successful, the disgorgement order will come. Okay. Any other purpose incidental thereto in accordance with the rules, friend, etc., etc. Mainly it is 2, 3, and 4 which are very powerful, right? Not very relevant. Now, as somebody rightly pointed out, it's high time that we had a small break. Now the time is something like 7:20, right? So let's sort of break for about 10 minutes. In case you have any queries, let us see, and then we can. I hope I have explained disgorgement to you. Whenever there is a fraud, the person who has committed the fraud would have made some unfair gain. He would have made some unreasonable profits. Now, those profits at the cost of the public is done. Now, the court will tell the central government to recover it from him. That is called disgorgement. Gorge means this part of the anatomy is called gorge. Okay, where the food goes in. Before it goes into this, actually called the gullet. So if you want to disgorge, what you should do, catch here, so that the food doesn't go in, then it comes out. So this is called disgorgement. Okay, and so fantastic. Envisaged means hoped or sort of foreseen or predicted. Okay? Envisaged. Something which is going to occur in the future, we try to imagine now. That's called envisage. Visage means face in French. Envisage means to give it a face, to give it a structure. Wonderful. Let's go for a small break. Sir, small break, sir. Continuing with our discussions on IEPF, the Investor Education and Protection Fund. We have, please remember, friends, this is a fund. Now, the fund will be managed by an authority. You got it? The fund is just a money lying. It's called fund. Now that fund has to be managed. The IEPF is a fund. That is done by the authority for administration of the fund. Got it? This authority comes within the Ministry of Corporate Affairs. Okay. Just like, I don't know if we'll be seeing that later in NAFRA, okay, the National Financial Reporting Authority, right? Similar to that authority. That is National Financial Reporting Authority. This is Authority for Administration of IEPF, right? So they're called an authority. Authority is an instrumentality of the state. See, the government cannot, the ministry itself cannot run everything. So what they will do is, under the ministry, they will form a separate body which will be given powers. And that within those powers and scope, this authority will work. But the authority is ultimately reporting to the minister, who in turn will sort of thing. So in the executive function of the government, there are many such devices. One is, of course, the authority. The other is the board. See, there is what we call Securities and Exchange vested in the committee. So in the IEPF also, there will be a chairperson and members. The authority will have chairperson and members. And these members will meet, and chairperson will, they will be guided. And in addition to that, see, the chairperson and members would attend meetings and give the broad direction for the authority to handle the fund. Okay. But there will be government servants, secretaries and all, who would actually run it on a day-to-day basis. See, this structure of government was laid down by the British. It is actually a good structure. It is to an extent adopted in US and Europe also, but this is typically a British structure where there is, see, the administrative mechanism consists of central government employees. The minister, etc., are elected people. So the elected people will give the policy and will tell, this is what I want. Thereafter, he cannot enter into implementation. Okay, of course, all easy said than done, corruption, etc. But to an extent, there is a segregation, so that the civil servant thereafter takes over the rule, the order, and then he executes it. That's why it's called executive. So the authority is similar to that. So the chairman and members would decide what to do. Thereafter, in some cases like in IEPF and all, authority, etc., there would be an independent board, like chairman and all that. They will again not be involved in the day-to-day management, right? So there would be an ex officio chairman who would be the secretary MCA. The chairman is straight away the secretary of the Ministry of Corporate Affairs. Secretary means, don't think secretary, that's highest position. Secretary means cabinet secretary. That is, it's like a very, very important senior administrative officer. IAS officer would be the secretary. And so of the Ministry of Corporate Affairs, he will automatically become the chairman of IEPF authority. And minimum 6 to maximum 7 members. These members would be taken from well-known eminent people who would be sitting on the committee. Of course, government servants also will be there. Okay. Chief Executive Officer, who shall be convener. So the CEO would run the fund. Okay. So the purpose of the authority is to provide required resources to get it from central government, and the IEPF authority will work in consultation with the CAG, Controller and Auditor General of India. So the CAG, because CAG is the auditor for public money. So the minute it goes to IEPF, only the CAG will audit. Therefore, whatever decision taken, they have to keep the CAG also informed. Okay. The IEPF authority shall be competent to spend money out of the fund for carrying out the object specified. So what we saw now, the 4 important objectives that has to be done. And the accounts of the fund shall be audited by the CAG. And the audited accounts, together with the audit report thereon, shall be forwarded annually by the authority to the central government. Then the IEPF authority, in addition to the audited accounts, will also prepare an annual report. See, the report will give a detailed thing, how many programs are conducted, what was the total money spent for it, which venues it was conducted, etc., etc. It's a huge report. That annual report is a full account of its activities and what all was done, and that will be forwarded to the central government. So the accounts and the report will be put together, and the audit report will also be given, and that will be placed by the central government. Here, the word central government means Ministry of Corporate Affairs. So the Minister for Corporate Affairs will present the IEPF and CAG's audit report before both the houses of parliament. Please note it. This fund is a public fund in as much as it is not something that everything should be transparent. You and I, as citizens of this country, are entitled to know how this fund has been utilized, where the money has come from. They cannot say this is confidential. In fact, they have published the report. The report will thereafter be available as a public document. And if you still have further doubts, you can go under the RTA, Right to Information Act, because the IEPF authority is an instrumentality of the state. So under the Right to Information Act, you can ask, what did you do? Where did you conduct? They have to give you the reply. There is no national security here. There is no secret confidentiality here. These are public information. Okay. So this is the provisions relating to IEPF. Not very important. I've covered it because, see, 2 hours of total 5 hours, completely we are covering the topic, so that you need not feel that something is not covered. Okay, idam vakshyami aseshata, complete without any gap. But out of that, I'm again and again telling you, rule 3 conditions, that is important. Similarly, this slide is important. And one thing, institute examination, no theory question. You will not get a question like, what are the purposes for which the Investor Education and Protection Fund can be utilized? No. If so, the answer is this. No, they would not ask you such a question. Okay. It will be only problem oriented, or at least maximum what they will do is they'll give you a practical situation and ask you to advise the company on the legal frame. Even there would be some application orientation to that question. There would be always an application orientation. Okay. Normally, when dividend has been declared by the company, or rights or bonus issue has been announced, a record date will be announced for listed companies. Only those shareholders whose name appears in the register of members on the record date are entitled to dividend or rights or bonus shares. So there will be something called record date. So clearly, who was the owner of the share on the record date? Whoever is the owner on that date will get benefit. Okay. But section 126, which I'm going to now see, contemplates a situation where the company receives instrument of transfer of shares, usually forwarded by the transferee of the shares for registration after announcement of the benefits. See, there could be a situation where you got the shares, but you got it ex-div. Now you are entitled to the dividend, or because if it had been, sorry, you have got it come div, which means that you are entitled to the dividend because you paid the dividend to him, but you didn't send, the transaction was not reported. It was reported after the record date, but you paid him. So you are entitled. So there's some dispute about the dividend. Okay, where there is a dispute. In those cases, in case any instrument of transfer of shares has been delivered by a shareholder for registration and the transfer of shares had not been registered by the company, such company shall take the following steps. So transfer the dividend in relation to such shares to the unpaid dividend account. The company need not so transfer if it is authorized by the registered holder of such share in writing to pay such dividend to the transferee. This is called mandate form or mandate from transferor. See, there is this. See, when I am buying the share from you, we know that the record date is day after tomorrow. By then, the transaction may not get completed. So what happens? The share is sold by you, come due to me, which means whatever is the eligible amount on those shares, I will pay the dividend to you and I will take it like that. That is the idea. So, which means that dividend I have to collect it since I've already paid it here. So, when I'm registering my transfer, along with that, I will give a mandate from you as a transferor. Once the company gets the mandate, they have to pay the dividend only to me and not to you, because you already taken the money from me now. Come due. So, the mandate from the transferor will come. Okay. Whereas if it is sold ex-div, no problem, because you will get the dividend on that day. After that, I will register my share and I won't get the dividend. No problem, because I didn't pay you the dividend. So this is extraordinary case of cum due purchases. It will happen. This 126 will happen. Or there could be a dispute as to the ownership of the shares. Whatever it is, the company has to keep in abeyance in relation to such shares. Any offer of right shares and fully paid bonus shares and all completely will be kept in abeyance. Okay, till such time the dispute is resolved. See, non-compliance with Section 124 relating to unpaid dividend transfer, etc. Fine. Now we are seeing, I'm so sorry. Now we are seeing a totally failure to distribute dividend. Friends, non-compliance with transfer, etc. is different. Here, this is a company which declared a dividend but has not paid. Amounts to fraud. You promised to pay, but you have not paid. Therefore, there is a punishment for failure to distribute dividends is company has to pay simple interest at 18% for period of default. Please note it, Your Honors, 12% is only for non-transfer. Whereas this is a case where you have not distributed dividend at all. Okay, in this case, 18% for the period of default, and director, because see, the company cannot be imprisoned. Directors can be imprisoned. So every director who is of this company, whether in default, if you are a director and this company has declared dividend and not paid within 30 days, okay, then imprisonment up to 2 years if knowingly a party to default. That's one of the rare sections where they retain the imprisonment, because they see non-transfer to unpaid dividend all is only procedural lapse. So they say it's okay, no need for imprisonment. But non-payment, knowingly you are not paying to him, that is a imprisonable offense, and not less than 1,000 for every day of default. Here the fine is considerably less, no doubt, but imprisonment. And you have to also note this important point, which is and. And see, the and has a significance. Maybe it may not be relevant to you now, but later on, when you study for your final law, self-preparation, self-study mode, what happens? You will come across something called compounding of offenses, where you will see that in case there is some kind of a fine or etc., normally the prosecution will come. See, don't think that this is something that you will just go and pay to the MCA and run away. No, the MCA will have a registrar, assistant registrar, whose job would be prosecuting. He'll be a prosecuting assistant registrar. Every day he will take all these cases to the law advocate and the public prosecutor, and the public prosecutor will file to the court, and you will be called. The defaulter will be called, not to some high court and all, to the jurisdictional magistrate court. Note it, Your Honors, it is not. Please don't think that it is some very beautiful high court you'll go and all. No. The local court, I don't know if you've gone to your local, just check out for your area, which is your magistrate court. If you're living in a rural area, there would be a provincial magistrate. If you're living in a metropolis or some bigger city, there would be a metropolitan magistrate. So, for example, where I live in Chennai, my metropolitan magistrate is Egmore. There's a Egmore magistrate court. So anything is there, my address is linked to all the police stations in this jurisdiction are linked to that court. So any offender, they will bring him before that court only. So imagine, it's a shame now when MD of a large company, he is come and stand along with the big pocket, prostitute, pimp, everybody will be standing. Along with them, you also have to, the MD also has to stand. Okay, it is a shame. So if you want to avoid it, if you feel, I don't want to go through all this nonsense, money I will pay, any amount, then you can go for compounding. So you can go to the ministry and tell them, boss, please withdraw your prosecution. So they will fix it at 3 times the penalty. It will be costly. The compounding fee would be 3 times the penalty or 2 times the penalty. But you don't mind paying it because two good things will happen. One, you don't have to go through the process of standing in front of a magistrate. Two, and very importantly, the name of the director will be noted as acquitted. Very important. Later on, when you come to director's topic in final, you will realize this. If your director is convicted, and that too for imprisonment beyond 6 months, he will be disqualified from being appointed as a director. Okay, so serious offense. If he is convicted, under 5 years, he cannot be appointed as a director. So all that can be avoided by compounding. But if you want to get your offense compounded, that offense should be only fine, or it should be fine or imprisonment. But if the penalty is fine and imprisonment, as in this case, fine and imprisonment, this offense cannot be compounded. You have to go through the process of court, etc. This cannot be compounded under the Companies Act 2013. Maybe you can do a plea bargaining before the court and say, please don't please don't imprison me, but I'll pay penalty, whatever. That is under the before the court. Okay, you can't compound it with the ministry, right? That is the one. So within 30 days, you have to pay the dividend, right? You have to pay the dividend within 30 days. Any failure to pay the dividend within 30 days, you will be subject to penalty and fine, imprisonment. Now, but certain cases are exempted. They're saying, hey, you took your effort here, but because of situation beyond your control, you could not pay. What are those circumstances? Again, I would humbly submit to you that this is important. 127, important. Just knowing it. See, friends, you don't have to read this topic again. If you have sincerely sat here and listened to me, and later on you also go through the slide, then matter of 2 to 3 hours, you can revise this topic and go with all the important issues. Work out about 10 or 15 problems. Just go through them and see how the answer. Do at least 2 or 3 writing practice. You need writing practice. Why? Because you have to write, sir. In the exam, you have to write. Okay. It's not a typing, it's writing. So you have to have writing. Many students, the handwriting will be very bad. They'll be scrawling and they won't see. Unless the examiner can read what you have written, how he can give you a mark? I'm humbly submitting. Don't mistake me. Don't get angry with me. But fact is that now your handwriting makes a big difference. Which means people like me who have a good handwriting get a straight edge in the exams, written exams. Okay. And similarly, language. Reasonably good, control over the language of examination, either Hindi or English. So you should be able to write good grammatical Hindi, grammatical English, which will be logical. The answer should be clear to the examiner, right? So these are exemptions from punishment under section 127. If you are able to show these circumstances, you can escape 127. What are they? Dividend could not be paid by reason of operation of any law. A simple example. There is a non-resident shareholder in a company which is from a person resident outside India. Okay, now war has been declared. Whatever, just example. Don't take me otherwise. Okay, with X country. Now, clearly the government of India says any citizen of that country, no payments and nothing should be made. No payment of invoices, dividend, any amount due to them, don't pay. Okay, so he may be a shareholder in the company. You declare the dividend. You can pay to all the Indian shareholders, but to that country, you cannot, because the law of India says don't pay. So he cannot claim that the law cannot, because boss, you told me not to pay, that's why I didn't pay. Okay, operation of any law. Mostly it will be with certain countries with which we are having our diplomatic relationships is failed. Then we might want to, even though there is another rule, maybe when you come to FEMA, you will study it, where if you want to, any investment from any person who is a citizen of any country which has land border with India, you have to get approval from the Home Ministry before you can allot him the shares, or before you can deal with him. You have to get approval from the Home Ministry, Ministry of Home Affairs, for information. So like that, some rules are there, and sometimes they may prohibit you. You say don't pay. No. Okay. Shareholders has given a direction. Shareholder gave directions regarding payment, and those directions cannot be complied with. Be careful, Your Honors. Mere inability to comply is not enough. The same has been communicated to him. So he wanted you to send it through to one particular bank. Right? Now, you could not do it. It's not enough if you don't. You have to communicate to him and say, look here, we tried to pay the dividend. This account is frozen. We are unable to pay. You wanted us to pay to this account. We couldn't do it. You can even give him one more opportunity. Give some other account, we'll pay. But by then, if 30 days is over, he has not given the new bank account and all, you are not responsible. Okay. Dispute regarding right to receive dividend. We saw that now. 126, where there is a dispute, we can keep it in abeyance. You need not pay. Dividend has been lawfully adjusted against any sum due from the shareholder. See, the shareholder may have other relationships with the company, in which case, whatever may be the other relationship, if he owes you money, you can adjust it and need not pay, provided it is lawfully adjusted. See, the debt should be a just debt, in debito justitiae. That is, there should be no dispute about the debt. He has to pay, has not paid. Then you can as well adjust this against that. Okay, nothing wrong in that. For any other reason, the failure to pay or post the dividend warrant within the prescribed time was not due to any default on the part of the company. In today's context, I can only put it this way: was you kept on delaying the instruction to the bank. You waited till the 28th day. Then on the 28th day, you sent a letter to the bank, DPA, so that with all the bank details, you sent it. No, unfortunately, after the instruction went to the bank, there was an overall strike, and all public sector banks on strike. Hartal, they are creating problem. Work is not done, so the bank credits it 3 days after the expiry of 30 days. Are you able to understand? So, but the failure to post is not due to your default. You honestly gave the money to the bank. Money is there in the bank. Bank has not paid it. 30 days gone. Then these are all special cases where you have to prove with the facts. See, here there's a simple example. 2 marks, yeah. Just like that, 2 marks. PQ Limited declared and paid 10% dividend to all its shareholders, except Mr. Kumar, who holding 500 equity shares, who instructed the company to deposit the dividend amount directly in his bank account. The company accordingly remitted, but the bank returned the payment, and the account number as given by Mr. Kumar doesn't tally with the records of the bank. See, whose fault is that? But be careful. He gave you an instruction. You could not comply with it. Did you inform him? No. The company did not inform Mr. Kumar about this discrepancy. Can it become a, sort of exemption? The answer is no. Okay. So what you need to do, a company shall pay dividend which is declared shall be paid within 30 days from the date of declaration. Okay. If failure to pay would, if you don't know section 127, no problem. Failure to pay the dividend entails, or failure to pay the dividend would result in imprisonment and fine. You don't know what is the period, no problem. In the instant case, Mr. Kumar has given directions regarding payment which could not be complied with. Nevertheless, the company has not communicated it to Mr. Kumar. Therefore, they will not be eligible for the exemption regarding failure to distribute dividend. So, over 5 lines, you'll get 2 marks. Okay. In fact, if you write what I've told you, you will get complete 2 marks. Okay. Did you notice one more thing? As I'm talking to you, I'm formulating the answer. You should learn this. So my suggestion, instead of mugging up, try to think about that topic and formulate answers in your mind and write it. Then correct it with institute material. And you'll find that slowly your confidence level is improving, your drafting skills are also improving, your fluency in the language is improving. This is far better than mugging up from the book, which is not a good idea, is what I would say. Institute also doesn't expect mugged up answers. They want application-oriented answers. Okay. Nidhi is again, if the dividend is less than 100 rupees, okay, and the declaration is made in a local language, then that announcement can be displayed in the notice board. That's all. It is for Nidhis. And then they will credit the SB account and be done with it. Okay. With this, we have completed the topic as such. We have completed the topic as such. But still, what I'm going to do is, I'm going to take you through a few multiple choice questions, MCQs, right? MCQ. The only problem is, I don't know. Post-dividend warrant. Sir, dividend warrant, you ignore it, sir. I told you now, when the company has issued share warrants, that is, shares which where the name of the owner is not mentioned, it will be bearer instrument. In those cases, how will they pay the dividend? So instead of crediting the account and all, they will issue what is known as dividend warrant, which will be payable to bearer. Got it? It won't be payable to any individual. Anybody can present it to the bank and take the money. But believe me, today, though these provisions are there in the law, you cannot issue dividend warrants and all that. No company has done it and will do it also. Okay? Very difficult. Already existing. We have so much control on Binami transactions, etc. They don't. So unfortunately, these words are there in the law. Students are asking, we are also explaining, but not relevant from exam point of view. Okay, are you clear? Now, coming to the point, let us have some MCQs. What I will do, I will keep toggling between the question and your answers. Let us start. Some questions are fairly easy, okay, whereas some questions are, you may want to take some time. What I suggest, instead of putting it on the group where I cannot see the chat box, and due to some reason I'm not able to get that thing, floating thing, where I can on the chat, I'm not able to get it. Usually it will come here, the top. It's not coming today. I don't know why. So I'll do one thing. I'll just try to stop share and then again I will share. Maybe it's because I'm coming not through the app, but through the okay. Now again I will share. Dividend can be declared only out of profits of current year, yes. Profits of previous year transferred to free reserves, yes. Money provided by government in pursuance of guarantee, all of the above could be the correct answer. All of the above, right? This could also be a quick revision of the topic. No dividend shall be declared unless depreciation is provided as per Schedule 2. transfer to general reserve is made, CRR is created, bonus shares are issued. Now, see, I don't know if you have MCQ in your exam. If you have, also not a big deal. MCQs are the easiest to answer. Why? Because no thinking is needed on your part. Answers are given there. If you know the subject, you can answer that in 2 minutes. Even if you don't know, you can do a little bit of guessing and get away. For example, slightly intelligent student will know that for declaring dividend, no CRR is not required. You also know that dividend cannot be, bonus shares cannot be in lieu of dividend. So these two are straight away out, 50-50 CD out, which only gives you to no dividend shall be declared unless depreciation is provided. Transfer to general reserve, no need. There is no need for transfer to general reserve. It is not a precondition for dividend, which means the correct answer is A. Depreciation should be provided as per schedule 2. In fact, I would love to explain to you what is that. See, why they are saying this. Why they are saying if you want to declare a dividend, there should be a depreciation should be provided. Why are they saying that? Any idea? Why do you think they are saying that? Could there be any reason? Actually, there's a very esoteric reason, sir. See, suppose a company is having a balance sheet like this, very straightforward balance sheet. Very straightforward balance sheet. On the asset side, there is fixed assets, 100 rupees. 100 rupees. Every year, this company makes 20 rupees profit. Every year, it makes 20 rupees profit. Okay, every year, systematically. Every year, what these fellows do, they arrive at the profit without providing for depreciation. So they make 20 rupees profit. Entire amount is distributed as dividend. So at the end of the year, straight away it looks like this. See, 20 rupees they will make, 20 rupees will be there, correct? See, it will be like this now. 20 rupees will be represented by 20 rupees cash. Now that money will be paid to the shareholders. So on the one side, profit will be there. So there will be some share capital, 100, for which fixed assets are bought. Then reserves will be, P&L account would be closed. So at the end of every year, this 20 will go, this 20 will go. So at the end of, say, 5 years, the balance sheet will look exactly like this. 100 rupees capital fund, net worth, 100 rupees fixed assets. But 5 years later, if the company is wound up, what will happen? The fixed assets will be sold now. Tell me one thing. Will the fixed assets realize 100? It will not. Assuming it realizes maximum, it will realize 30 maybe, which means the remaining 70 rupees, the shareholders are not going to get. So effectively what we have done, we have declared a dividend out of capital, and which is prohibited, sir. Under the Companies Act, it is like a commandment. Thou shalt not declare a dividend out of capital. So if you pay dividend without providing for depreciation, what you are actually doing is, to the extent of the depreciation, you are declaring dividend out of capital. I know it's a little esoteric to understand, but that is the correct accounting reasoning behind this provision. Okay. Otherwise, you can say depreciation is needed to again, when the asset becomes old, you have to buy it again. All that is reasons. But why dividend is linked here? Provision for depreciation, prudence, all that we will understand, sir. No doubt. Actually, correct way of understanding depreciation is very, very straightforward, sir. Sir, all expenditure has to go to the P&L, sir. All expense has to go to the P&L, sir. But when you buy a fixed asset or you create a fixed asset, you cannot take that entire amount directly to P&L. Simple reason, matching concept. Because the benefit from this asset is going to accrue over the certain number of years, which is the useful life. Now, so this has nothing to do with refinancing the asset, etc., etc. It is simply expense has to be written off. I can't do it in 1 year. So the law says you take this expense over the lifetime of the asset to the P&L, so that at the end of the exercise, the value of the asset minus any the terminal realization should be written off to the P&L. That's all, nothing else. Okay, everything else is like blah blah, where as if it's some tax planning and all, as if by buying an asset you will reduce the tax. No, by buying an asset, yes, you will get depreciation. To the extent of the depreciation, you won't pay tax, no doubt. But till how long? Till that asset value is exhausted. Okay, thereafter you'll have to pay the tax. So whatever tax you did not pay in the year when you claimed the depreciation, you will ultimately end up paying, say, 3 years later, 5 years later. If you do the math, you will understand. Depreciation is not a tax planning. It is only a tax postponement. You cannot take away the tax. Okay, that's why if you studied your accounting standard 22, you will know it is only a timing difference. Okay, it is not a permanent difference. It's a timing difference. So that has to be provided. That's why you will have to provide. Anyway, you have to provide for it in deferred tax. Okay. So the point we are trying to make, I'm sorry to make it unnecessarily complicated, but this thinking I am trying to demonstrate to you. Instead of being silo-based, compartmentalized studying, I want you to study across subjects. Okay. Don't do thing. I think that's why writing both the groups is the best way. You clear in one shot, you get away fast, and if you do well, you actually get a rank. Recently, one gentleman came to me for an interview. He is a very senior person. I was looking at a sort of interviewing for partners for my firm. He came, retired gentleman. He has got high marks in the examination, but he wrote final exam in 2 attempts. That is group at a time. If only this gentleman written both together now, for his marks, he would have been in the rank list. Somewhere above 30, he would be. Actually, writing both the groups together would have made a big difference for him. I mean, too late now at 60, but I'm saying I'm giving this example to make you understand. Don't be like him. If you think you are confident, then write both the groups. That way, your studying also will be reduced. There will be a lot of overlapping topics like dividend, which you need not study. Like intelligently, you can prepare and write the exam. Thank you for your patient listening, and moving on. Dividend out of reserves, rule 3. Okay, rule 3 dividend is allowed only if rate does not exceed average of past 3 years. Yes. Withdrawn amount does not exceed 10% of PC plus FR. Yes. Balance of reserves after such withdrawal does not fall below 15% of PC. Yes. All of the above is the correct answer. All the 3 conditions have to be satisfied. Okay. Right. Which type of reserves can be used for declaration of dividend? Sir, generally capital reserve cannot be used. If you see it in the balance sheet, beware. Normally capital, because the capital reserve is most of the time created out of capital items, which are not available to you for declaration of dividend. Okay, capital reserve arising on merger and amalgamation, capital reserve arising on forfeiture of shares. These are all clearly capital items, cannot be used for declaring dividend. You have to transfer it to capital reserve and keep it there. So not available. Only exception is a reserve. Rather, any capital profit you can take, sir, provided the capital profit was realized in money, okay, by sale of asset, etc. That alone you can use for declaring dividend. Okay. Otherwise, normally if there is a reserve in the balance sheet, you are not supposed to use it for declaring dividend. Revaluation reserve, no, that is only a notional reserve, and it has a totally different purpose. Accounting treatment is very, very clear. Unfortunately, most people, including members of our institute, forget. They think revaluation reserve is a genuine. See, they confuse. They think, Mr. Srikanth, the value of that building is so much today. Agreed. But have you sold it? No. You're only keeping it in the balance sheet so that that's only for show you're showing. It is not real profit. It's only a notional gain you're showing. Correct. So that how can you use that notional gain to declare a dividend? Boss, you sell that asset, realize the profit, that difference, and from that and use it and they declare dividend. That is different. But from a notional revaluation reserve, you cannot declare dividend, nor can you allot bonus shares out of it. Please. Okay. Prohibited under the Companies Act. Prohibited. In the, earlier in before 1997, there was a guidance note by the Institute of Chartered Accountants. Guidance note. I think it's still there. The guidance note only warned a member and said revaluation reserve should not be used for declaring. I think there was a guidance note on capital and reserves. In that, they said revaluation reserve cannot be used for declaring dividend or issuing bonus shares, which was a guidance given to members. Okay. So many corporate employees, members of the institute, but employed, they were using this loophole and saying we will allot bonus shares out of revaluation reserve. It happened in 98. I'm not joking. In fact, one company where I was auditing, they did it. I showed them the guidance note to our own member. On the other side, he was laughing and he said, Mr. Srikanth, that binds you. It does not bind me as an employee of this company or the company. Okay. Then I said, sir, I'll have to qualify. He said, please go ahead and qualify, but we are going to do it. Are you able to understand? SEBI did not prohibit at that time. Later, SEBI woke up and they put a prohibition there straight away in the LODR. They said very clearly, okay, no, if any promoter's quota cannot come out of revaluation reserve. Anyway, these are all practical stories. Okay, now you might it is not relevant. You cannot say it's not relevant from exam point of view. It will add to your depth. See, 40 years of my experience, I can transfer. You can take it. If you do that, you get my 40 plus your experience, which is what happened to me. My father started his practice in 1967. When I joined when I qualified in 1987, I joined him as an article clerk in 1984. From 84 for another 10 solid years, he transferred his experience to me. I learned from him as a chela. I sat as a disciple. I learned from my father, and he taught me how to draft, how to talk to clients, how to handle situations. These are some things that the institute cannot teach you. Only a senior can teach a junior. That is why that articleship becomes very, very important. If you use it properly, it is a life-changing period. But if it is casually taken up, then you lose out the benefit of such a great advantage. See, no other educational qualification except lawyer, medicine, and accounting. Only these three, this apprenticeship and articleship is there. Why? Because whatever is the knowledge contained in all the books that are there in the library is not equal to the experience of our members. And this experience is shared only from master to disciple, master to apprentice. That's how it is shared. No other way it can be shared. Sorry for this, but this is the ethos behind our articleship. Don't take it as a waste of time. It is the ultimate learning experience that you will ever get. Now they made it 2 years. Chalo. But the 2 years, pack it with learning is what I would say. Securities premium, right? You can't use it. You know that. Only 5 matters. Dividend is not one. So that leaves us only with free reserves. I'm using these questions as an opportunity to reinforce the topic. Okay, reinforce. These are all simple questions. You really don't need to, you can answer it very easily, but reinforce, recall, recap. Interim dividend can be declared by, you know the answer. Okay, board of directors. Okay, there is a little bit of confusion whether it can be withdrawn. Very clear opinion. In my opinion, it cannot be, because the interim dividend includes any interim dividend. So dividend once declared has to be paid within 30 days. More so, the law also says once you have announced the dividend, within 5 days, you have to deposit it in a separate bank account. And thereafter, it should be used only for payment of dividend. So these two things together, when I read statutory from the statute perspective, yes, it cannot be withdrawn. Once declared, definitely it cannot be withdrawn by the board. If at all you want to withdraw, you declared it to the shareholders. Now go to them, ask them, boss, we are not in a position to pay. Kindly permit us to withdraw. Then you withdraw. With the permission of the shareholders, you do it. Because it is their money. Yeah. And remember the penalty for non-payment of dividend once declared. 127 applies to interim dividend also. Be careful. Because tomorrow you can't argue before the MCA and say, I'm not liable. And unpaid dividend must be transferred to unpaid dividend account within unpaid dividend account within 7 days. Dividend once declared should be paid within 30 days. Right, sir? And this 37 is to confuse highly intelligent people. They will say, hey, sir, from date of declaration, 30 days, sir, plus or सात दिन है ना, so 37 days. Sorry. Once the 30th day, it becomes unpaid. Immediately within 7 days, you have to transfer it to unpaid dividend. And unpaid dividend account should be transferred to IEPF after 7 years. Earlier it was 3 years. Now it is 7 years. Okay. Once dividend is declared at AGM, it cannot be increased. It can be reduced. Okay. It can be reduced. It cannot be altered. Board cannot notify. Once they have given it, it cannot be altered. Okay. Of course, it can be reduced, but at a lower rate. But it cannot be altered. Okay. The shareholders. Sorry. Once dividend is declared at AGM, nothing can be done. It has to be paid. Before it is approved by the shareholders, at the AGM, the board can stand up and say, boss, we made a mistake. Kindly, we have proposed 18%, but kindly, when you approve it, please approve it for 15%, boss. It can happen. At that AGM, you can take up. And at that AGM, if the members so agree, 15%, then 15%. But once declared at AGM, it cannot be altered. But till it is declared, it can be reduced by the members. But even members cannot increase it. Only the board will recommend. Board recommended rate can be reduced, but it cannot be reduced. And once it is declared by the members at AGM, that's it. It cannot be touched. It has to be paid within 30 days, transferred to unpaid account within 7 days, transferred to the IEPF within 7 years. Straight. Which companies are required to transfer a certain percentage of profits to reserve before declaring dividend? None. There is no requirement for transfer of profits to reserves before declaring dividend. Okay. Penalty for failure to transfer unpaid dividend to unpaid dividend account. Interest at 6%. Super. If that is so, then nobody will pay. Interest at 10%, even that is reasonable, I would say. Fine, 25,000 only. No. Okay. Interest at 12% per annum. Right, sir? Now, let me see if you have any questions. Then maybe we'll go to another set of questions. Right. Yeah, you are all trying to answer questions, but I am not able to see it. Go ahead and do it. No problem. Let's do another 5 more questions quickly, and then we will close for the day. Maximum time within which dividend must be paid after declaration. You know that. 30 days. Okay. Dividend can be paid in cash, in kind, no. By issue of bonus shares, no. Bonus shares cannot be issued in lieu of. Of course, dividend is of 2 types: cash dividend and equity dividend. That is dividend by way of bonus shares. So both A and C could also be an answer, but payment can be only in cash. Okay. But when we talk about dividend, we say one is cash dividend. Friends, when we use the word cash here, it means through bank. Okay. Please understand. Word cash here means in specie. Okay, not in kind. In specie means in money. Specie means money. The coin of the realm is called in specie. So you get paid in specie. Okay? Every month when you join a company, you expect to be paid in specie. You expect to be paid in cash. You expect to be paid in money. In that sense. Of course, the payment will come into your account only, but still we call it payment in cash or in specie. You can even use the word specie, not species. Species is we are human beings are a species. A class of living beings is called a species. This is in specie. Okay, this is specie, meaning in money. Dividend shall be paid only to registered shareholders, beneficial owner or depository, legal representatives, all of the above. All three are eligible. Registered shareholder, beneficial owner, example depository, okay, and legal representatives, right? Which of the following cannot be used to pay dividend? Yeah, you know that. All of the above. Hmm? But friends, the share forfeiture and all that, only in the BCom exam and in CA intermediate examination you will study pass. In real life, I have never seen it in. See, I'm telling you, 40 years, no company has forfeited shares. Whereas standard question in issue of shares is forfeiture and reissue. As if every company keep on forfeiting and reissuing. To my knowledge, no company has forfeited and reissued any shares. Okay, is the first be one or two examples we can. To my knowledge, no, I have not seen one company. Similarly, these partnership problems will be there in the accountancy paper, wherein A and B carrying on partnership admitted C, each giving 1/18th of their share. Why are you giving 1/18th? Yeah, why make it so difficult for me to calculate? Yeah, why can't you have some simple 1/4 and all? You can't think like that. And so that in fact, when any company comes to me as a client and partners are all saying, "Sir, we want to admit Mr. C. We want to give him 1/18th, 1/18th." I tell him, "Boss, why are you giving 1/18th, man? Give 1/5, yeah." Like that, I will advise them. What's your problem, man? 1/18th. So, I mean, this has always been my gripe. Those fractions solving partnership problems. And I was so weak in math. There is numeracy. Though I'm a rank holder and all, I'm a zero in very weak in numeracy. Numeracy, that is calculation, totaling. I will check my answer 15 times before I confirm it. That's I'll take double care because I know I'm weak, so I'll take more care. That's all. Nothing wrong. When I know I'm weak, I should be more careful. That's all. Interim dividend must be paid within 30 days. Friends, remember, dividend includes interim dividend. Maybe this can become a Taraka Mantram also. Keep on remembering it. Dividend includes interim dividend. Okay. We know this. Now, board may declare interim dividend out of profits of the current year up to preceding quarter, profits of previous year. But reserves, no. Reserves you cannot use for interim dividend. For final dividend, you can, provided you can satisfy the conditions. Okay. Dividend cannot be declared out of capital. Capital profit realized in cash. Subsidy receipt. Capital profit realized in cash, you can declare dividend. Okay. Capital, thou shalt not declare dividend out of capital. I already told you that. Very important rule. Which is why discount is also prohibited, because that amounts to upfront dividend out of capital. At the time of taking money itself, I'm saying, don't pay me 10 rupees, pay me 8 rupees, but I will credit 10 rupees in your account. So that at the time of winding up, I'll give you 10 rupees back, where actually you gave me 8 rupees. That straight away dividend on upfront dividend, not allowed. That is why dividend discount is prohibited, but for two exemptions, discount issue of shares at discount is prohibited. The board recommends dividend, but declaration is done by shareholders in AGM. Right? Dividend to preference shareholders must be paid before equity dividend. It's obvious. Huh? I don't want to waste your time. Declaration of dividend is not allowed if company fails to deposit mature deposits, fails to redeem debentures, fails to pay, or any of them. Okay, you cannot declare dividend. Okay. Which of the following can be declared without profits? Preference dividend on cumulative preference shares? Yes. Okay. So with this, we will close. We can go on, but we will close today. But I think any doubts are there, we will see, and then we can close it. Beautiful, sir. No, nobody has any doubts. I'm very happy. Right? I hope you had a good learning. Next topic we will take up in the next session on Saturday. Till then, I wish you all the best. Well, bye. Class over, sir. Yeah, session over. Nice.